SBA 7A commercial real estate loan up to 5 million and commercial property mortgage up to 50 million. I will be showing you how to get these. But first, my name is Michael from Viral Funding Solutions. And no further introduction, let's get right into this. You're seeing a document I put together of how to get an SBA 7A commercial real estate loan. If you didn't know you can get it through there, yes, you can. You probably heard of the SBA 7A and the 504. So I'm going to get into a little bit of those and why the 7A program will make more sense to get the commercial property you are looking for, as well as the alternative if perhaps you're looking for more than 5 million, perhaps up to 50 million, and going the traditional real estate financing route. So right here, you're going to see me say something like SBA 7A commercial real estate loan has a similar function to the SBA 504 in some ways where you can use it for real estate, but you cannot use the 504 for working capital. You could use it for land and existing buildings, heavy machinery, and things like that. But if you're, and also if you're looking for like the land, you're trying to build a new construction project on it on top and adding more to it. But for commercial real estate purposes, you have this SBA 7A program that I would recommend you go through, and I'll leave more information down below in the description, as well as a questionnaire form if you have not submitted, where you can get a personalized and customized email response on your best funding option and options, very thoroughly broken down. In a similar format, you'll see something like this, but it could be a little bit more customized to you. And it'll show you the differences. Perhaps you're trying to purchase an existing business and you're trying to add a new building, a commercial property, but you're unsure about going at it this way, taking out another mortgage, or how much do you really need right now that we can try to get you approved for? And did you need working capital on top of that? So we go the SBA 7A working capital route on top. What do we do? So I put here has a similar function in some ways. Since the SBA 504, usually you see it at 5 million. Sometimes you've seen like 10 million, sometimes it's been readjusted. So that's what you're seeing on a lot of cases with the 504. But with the 7A for commercial real estate, it's been going more deeply now. And I have a lot of people right now who are looking to acquire new commercial property, existing, etc. They're all going in different directions. So I'm going to go through some of the qualifications, the eligibility. So you can get a commercial real estate loan, CRE loan for short is what I call them, with a minimum FICO credit score of 685. But the biggest thing is that you can only get up to 5 million in a specific sector with the SBA 7A. So if you're specifically looking for something at 10, 15, 20 million, I'll get into what some of those can look like and what perhaps you probably wanted to take a look at. If this wouldn't make the most sense, perhaps a working capital loan would be the way to go for your existing business. And so it could cap out. If you're looking for more funding, you might look at the traditional commercial real estate financing route. And over here are more details like the product overview. I want to go through with loan size. It's 500,000 to 5 million with this SBA 7A CRE loan. Use of proceeds are for commercial real estate refinance or the purchase of it. So you kind of would see something like that with the traditional real estate financing sector outside of the SBA 7A. And the time to funding, pre-qualify, you do that in 5 minutes. So it's extremely fast. Conditional approval is in about 30 minutes and funds as fast as 30 days after credit approval. All right, so it's pretty quick. Interest rates are prime rates, which you're seeing right now in today's market at 5.5%, and that number can increase. So if you're watching this later on and the interest rates have gone up, just know that that number is added onto the 1.5 plus 2.75%. So you're looking at the most probably 7.5, 8 points and above. And our fixed and variable rates. So just know that it can be variable depending on the market, on the landscape. It has to be readjusted perhaps every 90 days to conform to your market. And so that's why it's a variable, and sometimes variables can be a little bit higher. So financing, you get up to 90% financing. So that's an amazing part about going through the SBA 7A commercial real estate program, that you get up to 90% in financing, which is extremely amazing to have. The loan term, 25-year, fully amortizing CRE loan with no prepayment penalty after 3 years, which is amazing as well. And year one, it's equal to 5%. Year two, you get 3%, and year three is equal to 1%. So you see how that amortization year for year ends up going back. Now, payments. These are monthly payments that will be debited from your checking account. The fees are 1% referral and package fees plus banking closing costs. It's 2.25% to 2.76%. SBA guarantee fee depending on the loan size that you're getting. The security here, there's a first lien on subject property, which is a very common thing, especially with commercial real estate and any other form of assets-based financing, plus best available lien on business assets, plus personal guarantee, which is a very common thing. Geographic coverage, this can help out nationwide. So here are some of the qualifications and the borrower eligibility, and you'll see if you can qualify for this. Public records, have no bankruptcies or foreclosures in the past 3 years. That's just with any kind of SBA 7A option. It's not just with commercial real estate, but it is with working capital, debt refinance, and a lot of other things that you're looking to do with the SBA 7A is no bankruptcies or foreclosures in the past 3 years, and be very careful about having open liens. Have no outstanding collections, have no open tax liens, as you see there, federal tax liens, no recent 30+ day late payments, so make sure none of that is showing. For your cash flow purposes, you must have sufficient business and personal cash flow to service all debt payments, demonstrated by 2 years of tax returns and financials. Sometimes, with overall SBA 7A loans, you may see 3 years of tax returns, but here we're saying demonstrated by 2 years of tax returns and financials. If any, we'll probably ask for more, but that's what we look at as the standard. Here are the SBA specific criteria. Have no felonies, what you're going to see across the board. Have no delinquencies and or default on government loans. So these two alone really, I've seen in a lot of cases lately, has disqualified a lot of people on the fact that they've defaulted on government loans, or perhaps you show defaults for all other types of funding, and sometimes they can play a factor. But for this case, have no delinquencies and or default on government loans. That's what we're looking at. Basic eligibility that you have to meet, time in business, you must have above 2 years to qualify. I mean, you have to service the debt. We have to make sure that you're able to handle it. Your business is more established, that you can afford the repayability and a lot more other factors. Owner or owners, there's more than one in your business, must be U.S. citizens and lawful permanent residents. So you have to meet that. Your business must be located in the U.S. So I get a lot of people who will ask me, I'm from somewhere else here and there in a different country. We're doing this located in the US. Your business must be open to all non-discriminatory basis. That's self-explanatory. Businesses is operating for profits. Make sure you have that, not non-profits. Your business must be able to demonstrate repayment ability from the earnings. So, right, we go through all of this stuff, and I can ask for it from you, and I can verify it all myself. We still will go into it through underwriting, so the lenders have it, and then we can make a better evaluation after underwriting comes through. Then I'll give you more feedback. Your business must not be involved in lending, investing in real estate. So I'm going to come back to that in a second. Religion, politics, gambling, or sex-related industries. So when you're investing in real estate, you have to be careful. It's not going to be applied for like apartment complexes, single family homes, these fix and flips, these rental investment properties where you're going to make a quick return, or it's going to be just used. It could be more long-term. You're taking on more properties. You just have to be careful that's not being used that way, and so forth. So at least 51% of the property's square footage must be occupied and used by the business. So we usually look at owner occupied with a lot of this, not non-owner occupied. So keep that on the back of your mind. And I'll go into a little bit of this more. I put some stuff on a piece of paper here that I wanted to make note of that it's not here. So I have additional information that I'm not missing, although I can just tell it to you as it is, but make sure that you understand every piece of this. So again, going back to the investment properties, as I said, apartment complexes, single family homes, or any kind of commercial real estate that is not owner occupied, make sure that that is taken care of. Now over here, use of proceeds to refinance or purchase of owner-occupied commercial real estate. And I just made the point of that. I want to reemphasize it because not a lot of people really understand that or come from it from the wrong view. Process flow, this is kind of what you'll expect as in the step-by-step process and how I can follow up with you in the process. Step one, you go through the pre-qualification. You will input your personal info along with your loan info, such as the amount for the purchase or the refi, whichever one it is, your business ownership info, and property ownership information, which is a very common thing you see with the CRE loans. Step two, financial section. I will need to collect this information from you. It could be 2 years, but in a lot of cases, we're going to want 3 years of business tax returns, 3 years of personal tax returns. This is very common with the SBA. Interim profit and loss and balance sheets, business and management info, property information. Very, very common. We need all of this stuff. What are we looking at? What is it appraised? What is all this? So that's what it's needed for. And then to calculate a lot of like the loan to value, loan to costs. So it's very important information that we know. And then purchase contract, if it's applicable. Step three, credit approval. This is where then the step will go into an appraisal that takes place, environmental review, which is part of phase one. So now we're getting into that appraisal step, and then we're going to go in through credit appraisal, and then we're going in here, step four, which is closing. I'll need business documentation, a lease agreement, and then loan doc preparation. So fees added, and this isn't always going to be, depends on lender to lender cases, but in a lot of commonplace, you'll see an addition to 20% to 30% down payments. Sometimes it's a 10%, but it's a commercial real estate property. And then you will also have to pay other upfront fees that include property appraisal, survey fees, legal costs, loan origination. So it could be a 10%, 10, 20 to 30% if we're going more in the traditional real estate route. And in the traditional real estate with the property mortgage, you see 20 to 40%. But because it is SBA backed, and over here, as you got to see, let me come back up there. See if we can find it. Just so you see how I can say it right now, but I'll make sure we find it. There it is. Financing, you get up to 90% financing. So that says a lot. It speaks for volumes when you go through the SBA. So over here, I might give you an app, I may give you a place to go and start, and you'll learn information. One of these lenders or one of these companies that I prefer going through is SmartBiz for it. I know there are plenty of others, but I recommend them as being one to turn to. And I've made reviews on them in the past that I'll try to link you to down below in the description. And if we have time, we'll probably come back to it. But if not, it's okay. It'll be down there. Now, what is your second option? Perhaps you're trying to purchase this existing business. Maybe you're trying to purchase the property, right? Because that's what a lot of people do. They tie it to their LLC. They have an S Corp, C Corp. They're operating in this format. Now, this is another great one to look at. So this can be your option to default on, as in like this is the one you want to go to, not as an actual default. You can get a commercial property mortgage with the following. The approval amounts that are given when you're going down this traditional real estate commercial property mortgage is you can get approved between 100,000 to 50 million. The minimum property value though that we must see is at least 150K. So make sure you have that. Loan to value, 70 to 75%. So we're not seeing those higher amounts like you would see with the SBA 7A, but that's nothing necessarily wrong about it. You just have to understand the value of the commercial property that you are acquiring, what you're getting yourself into. So for credit levels above 680, that's what you want to see. 70 to 75% LTV is what you would see. And it has to be income producing and is a low risk property. When we appraise and we look at everything, the loan to cost, loan to value, all the things that it needs to take to get it processed. And then 50 to 70% loan to value is for those who have credit below 680. So as you see commonplace, even if it were with the SBA 7A loan, you want to have that 680 and above FICO. Sometimes people go 650, 660. Realistically, a 680 above in today's market, you want to have a 700 and above to get processed. SBA loans, when we're talking about 7A loans, usually you want to have a 400,000 to 500,000 and above in annual revenue, 680 above in a FICO, and 2+ years in business. Profitability is a huge factor when we look at SBA 7A loans, specifically with working capital at 2 years plus of profitability, 2 years minimum. Sometimes they require a 10% profitability, and credit is a huge factor. So I'll get back to that in a moment, but actually I'll go into it now. Credit utilization ratio needs to be low. Debt to income, you need to be able to service the funding. We are talking about Uh, a lot of different like things like inquiries, no recent 30-day payment, late payments, child care, child support may be something that's holding you back, and a lot of other things that need to be disputed. And so if you need help fixing your credit and you don't want to do it all on your own, perhaps you've tried and there's something else you need to add on top of, and you don't want to wait time and time again, having to do this over and over, waiting a year now, you're back in the same place, then I'm going to leave my credit repair resource down below in the description if you want to learn more about that. So term length, so over here, let's come back to this. So 50 to 70% loan to value is for those who have credit below 680, and it's a vacant property, and it's a high risk property. So it's very common. You're going to have to think about that and how much more of a down payment you'll need. So here we have term length, that's 5 to 30 years. Usually you see 20, 25 to 30 years with commercial real estate property. So we expect there to be a longer frame depending on what you're actually looking to get. Interest rate percentage rate, 6 to 9% with a credit score above a 660. So if you already have a 680 and above and you meet these, you already got the 70 to 75% loan to value. And then you have 6 to 9% with a credit score of above 660, which is excellent right now in today's market. When you compare it to SBA loans, I mean, with a fixed, you probably get up to 9.5% or so, and then a variable could be a little bit higher. So it's a bargain when you're looking at that. And I know with today's marketplace, it can seem a little daunting on what you'll actually have to be paying over the years. But if it's something that's going to be used and of high value, and you see that there's a big return on this, then it makes sense to move forward, and it exceeds the repayment, of course, especially when you're having such a low amount. And it's income producing. So 6 to 9% with credit score above 660, and it's income producing. 10% to 14% interest range for a credit score below 660. So you see the jump there. And it's a vacant property. Prepay penalty, Yes, it depends on your loan term. So you'll see a lot of this stuff, like especially in the contracts. So make sure you take a good look. Foreign nationals, yes, it's eligible. Time to close takes 3 to 4 weeks. So when you compare it to an EIDL loan, yeah, it takes a little bit more time sometimes. When you're speaking about, oh, not an EIDL, I'm going off track now. And an SBA 7 has been speaking about EIDL content lately. With working capital SBA loans, and that's aside from real estate kind of stuff, those are like sometimes 6 to 8+ weeks on out. So if you can close in 3 to 4 weeks, that is exceptional. Extra details, you get a fast approval, quick underwriting process, very streamlined, hassle-free. And then I'm going to be with you along the way to let you know what's happening. Competitive rates, down payment you need, it's 20 to 40% in most cases. So we kind of went back 90% financing SBA 7A, so perhaps a 10%, sometimes 20 to 30. And then you see a 20 to 30%, but then here 20 to 40. 40% assessing the risk, assessing the property, assessing there's more to assess because we're not approving you more like the SBA 7A, and it's not government backed. But the difference is it's a whole different way when you're going through the commercial property mortgage this route, but we're getting you a lot more funding. So as opposed to getting 5 million, perhaps it opens the door to getting 10 million, 15 million. That's actually what you needed to get. And think about you're acquiring commercial real estate, you have a business, an existing business, you're adding on top of that, where you're getting another business, and now it's adding on, and the value is increasing over time. You may be taking out funding for this existing business you have on top of this. So think about all of these things that can be a little bit extreme, but I can help you make it much more simple. So down payment, it's equal to 20 to 40% in most cases. That's just a very common thing. A lot of people are like, I only have 5%, 10%. They want to meet the minimum of 20%. But I say 20%, you have to have exceptional profile. The appraisal, the type of property that you're acquiring, what kind of property is it? What is the market out there for it? What does it need to get done with it? Are there any repairs? What has it been depreciating in value? Has it been appreciating? And there's a lot more to this that I won't get into right now. But documents that are needed for pre-approval, a commercial real estate loan application, I can send it to you and I'll just need that information sent back to me. And this can all be done via email. So you can send it to me and I can send it over, forward it over to the lender. Sometimes we can upload it on an online digital application and we get everything on our back end. But a lot of the times I'll ask for it from you. You can send it to me, then I can always forward it over. Check it first, forward it over. So commercial real estate loan application, I can send to you 3 months of bank statement, sometimes 4 months, but that's what you'll see. Purchase agreement if you're buying it, mortgage statement if refi, recent credit reports, which is very a common thing. We need to be able to check all of this, make sure nothing is out of the ordinary. You're keeping everything low, maybe no debt. Well, a lot of people do have that. I know it can be a little bit surprising to some of you who are like, I'm taking over 400,000 in debt. I just took out another 100,000 in using credit cards, and I have other advances and loans to pay off. I get it, but that's what would be required. Rent roll, if applicable, copy of appraisal, if available on that end. So what I will then do is, if we haven't done this yet, I will send you a questionnaire form for real estate financing, and you'll see this one right here. We'll click the link, see what it opens up here. And with the SBA 7A, with the commercial real estate for that one, I can collect the information from you. You can start the online application and we can go from there. That's what I would recommend with the commercial real estate with the SBA 7A commercial real estate loan, is you can start that application by going on it digitally. I'll send you that information in time. And then there are other ways, but that's a great way to get started. And so I'll ask you some things like property address, property type, if purchased, what is the purchase price and down payment that you have available? And having known this stuff already, what the expectations are, you should be able to readjust to that. And if you can, then it may not be able to work for you. If refinance, what is the estimated value and what is the amount owed? So if, I'm not saying you have to fill out, you can just say no, not refinance. A lot of people do. What is it that you're closing under the entity? Is it an LLC or Inc. or personal name? Amount of liquid assets available. And so back up here, this makes a huge difference. Is it going towards your business? Are we looking at just your personal? Are we looking at both? So the more, the better, so we can evaluate those. Amount of liquid assets that you have available, obviously more the better, and it obviously helps when you have that. How many investment properties have been owned by the borrowers in the last 36 months? What is your estimated credit score? Is a property generating income? That definitely helps your case, like we saw earlier. What are your rate and term expectations? And we got to see that. Make sure you rewind this if you need help with that. Your name, your email, your phone number. I would want to say mobile preferred. I may change this so I can follow up. I don't want to be always calling the gatekeeper, Sally or John. And then again, I called 3 days later because you never responded back to an email. You went ghost. Like, I'm not gonna pressure you. I'm just gonna say, hey, I just sent you an email, or hey, this is getting processed. We're getting your rates and term expectations adjusted to see if this is even valuable. And then we'll probably take it into the underwriting, and then thereafter I can follow up. Any additional notes? This is your moment to share with me. If there's anything more I need to know that I can help tell the underwriters, the lenders. So it'll look like that more or less. I offer a lot more services, just put a handful. But this could change in time, or it could stay like this. There may be more questions. This may be a big change too. But those are the expectations. There's also construction built from the ground up. I won't spend too much time on that section, but you can see, let me see if I, over here, we also have ground up construction loan programs from 100,000 to 50 million. And I may make a separate program, separate video for that. And so how you can understand how all that works. But just to recap, we went over the SBA 7A commercial real estate loan, how you can do that. One of them being SmartBiz that I recommend. I've helped out a lot of business owners already go through there and streamline the process. Got on the documents, understood what's happening in each part of the underwriting, what the lenders are expecting from me, from you. And if you're looking for a purchase of an existing business and you're using it to purchase the actual property, that may be an advantage for you. And you can also look at, if you don't want the SBA 7A, and if there's not enough, you're looking for more than 5 million and you're trying to go another route, and you can acquire another mortgage and you want to go the commercial property mortgage route. You saw how we just went over that and what the expectations are over here. Let me quickly move this down over here because this is the SBA 7A. And then traditional real estate financing is what I labeled it under for commercial property mortgage. If that's the route you are willing to go in acquiring that commercial real estate. And so down here, I just put a little bit more options. Like, this might not work if you're trying to purchase an existing business, or if you're not even trying to purchase an existing business or something else. And I'll just give you more information on maybe working capital loans and a few other circumstances. But if this is a route you're willing to go and you want to take the time to provide the information, you really want to acquire that property and you need the help, then you can go ahead and get started. And like I said, if it's through the SBA 7A CRE, you can just get started through the application. And it's usually maybe a link that I'll send you to. And then you can get started. One of them being SmartBiz is a great direction to go into. and that's what I would recommend as being one of them. So I left video content and reviews on those programs that I'll link you to down below as well. And if you need further help on this subject, please feel free to ask me questions. I'll answer them for you. If there's something that may have been missed, because there's always something, maybe you have a certain circumstance and you're wondering about a time frame. If I did this, then how much time would it take for me to get this, and when can I come back? And a little bit more information. And if you're looking for all other types of financing, working capital for like through a cash advance, unsecured term loans, lines of credit, secured financing backed by collateral, accounts receivables, inventory financing, equipment, personal/startup loans, grants, idle, everything in between that, look down below in the description where I'll have more information on like those working capital loans through the SBA 7A, as well as a few other ones. But let me see, make sure I didn't miss anything. I wrote some notes here. You already know that the 504 is outside of this. This would be the way to go. Existing buildings or lands. We already did that. We already went through this section. You can't use any kind of SBA for an investment properties, and you have to be very careful of that. I want to make sure I didn't miss anything here. This is very self-explanatory, but I put additional notes just so I make sure that I'm not missing anything. So land and buildings for 504, yes. Construction of property for the 504 usually. You can see this with ground up construction as we just briefly went into. Owner occupied, you have to think about that. Purchasing an existing business must be owner occupied, at least 51% of available space. Purchase land and building construction. SBA requires that your business operates 60% of new structure, 40% for other purpose for leasing, renting, or other purchases. That's for purchasing land or having building construction and some of the requirements that I may make a separate video for, because there are certain things about that. All right, so that's everything from myself. Look down below in the description to get started. Fill out that questionnaire if you haven't. What I would do is, if you want to look at getting commercial real estate property, I'll have a real estate financing form, and tell me what kind of property you're looking for. And then I'll also have more of a generic one for all types of financing. You can even put in the use of funds for real estate. And in the additional note section, tell me you want a commercial real estate property, but I may be looking for working capital for my existing business to do this. So then I can give you a whole section on top of the real estate. So it's a lot of information. I know I don't want you to get overwhelmed, but I'll break it down for you. So that is everything for myself. And if you found value out of this video, I'd appreciate you if you give it a thumbs up. Share with others who you feel will get value out of it. It could be a complete stranger, a friend, and or a family member. But you know that at the end of the day, when you rest your head on your pillow, you may give it that thought that, hey, I was able to help a complete stranger, or a friend or family member, and they don't have to feel lost. They have the education they need now to make more of an informed decision on how to take action. And if you haven't subscribed, please go ahead and do so and click the bell notification icon so you do not miss any future videos I will be coming out with. That is everything for now. Take care.